Good evening, guys. Welcome back to Not So Late Night Show. And today we're going back to Malaysia, talking back tech stocks, right? Tech stock space in Malaysia. We started off Not So Late Night Show by talking on a lot of the tech stocks listed in the Malaysia Stock Exchange, Bursa Malaysia. And of course, over the few months, we have transcended to the US, and also we talk about particularly one company also listed in the US back then, now listed also in the Hong Kong share market, Bilibili. So we have Not So Late Show has practically traveled around the world, even though traveling right now is not open yet to us physically. So nevertheless, we still feel that there are plenty of good companies, potential companies back in Malaysia. And I would also admit that back then, after going through a lot of the Malaysia tech companies, there are still a handful that we haven't really covered yet. And today we will be covering one of it. This stock has been actually rising quite well in terms of the share price performance ever since starting of the year until now, right? Of course, during the middle part, we have experienced volatility. There is a little bit of correction here and there, but nonetheless, if you just look at this stock from the beginning of the year up to today, it is on an uptrend. And of course, the golden question is that whether this business can continue to grow and continue to be a potential stock pick for investors like you and me. So we're going to talk deeper about MPI. You might notice that the logo, it's a little bit familiar to one of the banks. It's because it is one of the members of the Hong Leong Group. All right, we'll go through also the so-called shareholding structure later of MPI, how it links back to maybe the Hong Leong Group, and of course, touching more in detail of what MPI does. But Chun Beng, we have a lot of OSAT companies in Malaysia. Do you see MPI as one of the companies that maybe has certain kind of advantage, or I would say has something up their sleeves that the other OSAT players might not have?
For me, I think Malaysia has been having a lot of companies like this due to the nature of what we are good at in a way. But then, I mean, if you talk about whether they are really standing out because of their client base or whatnot, I think it's kind of hard to say that, because they don't have any direct link to any big companies or whatnot. But they are just doing this on a yearly basis and has been proving some good result, especially during the pandemic last year, where there's a boom of semiconductors. So I would say it follow the mega trends, but then down into they are just another semiconductor company, not into the upstream, but it's middle to lower stream of it. So, but we shall see what is the thing they are trying to do, tap on all the potential new things, 5G, electric vehicles, and so on. So whether this will bring them to the next level or not. I think we can start the section.
Okay. So, of course, as you all know, KayaPlus Premium Club is now open for you guys to join. It is a private invitation. You get to be invited into a private FP group where we talk and discuss a lot about stocks all around the world. Of course, there will also be a monthly private sharing session. That will be next week. Next week, we will be doing our second private sharing session ever since the inception of KayaPlus Premium Club. Of course, those who have attended Stock Pass 2021, being a Premium Club member means that you are also entitled to Stock Pass 2022 and beyond. It will become a component of KayaPlus Premium Club. Of course, there will also be premium articles, digest top ideas, and also investing insights. And if you are also one of the attendees of the Dividend Gems, you will also be getting a furnished report based on our so-called checklist and the hurdles that we have listed in the Dividend Gems course, basically screening one particular company and letting you guys know whether this company passes all the criteria and the hurdles or not. Last but not least, thematic events and webinars will also play a important part and component of Premium Club. And speaking about the upcoming thematic events, you would have electric vehicle ecosystem coming to us this Saturday, 24th of April. It will be almost whole day event around 10 a.m. to 4 p.m. It might get extended if we actually squeeze up too much information. Of course, here you have it, the cover for our upcoming Saturday event. If you guys are interested, you can actually sign up via the links as an individual event, or if you can actually opt to subscribe to Premium Club, where you actually get access to all the upcoming thematic transcript events for free if you are a Premium Club member, and not by buying the individual event as itself, right? So I think our EV sharing session will the materials are almost done already. We'll be very happy to share just a glimpse of what we will be covering this Saturday. So we actually divided the courses into 4 chapters. We squeeze all of this into one day. Basically, we'll talk about lithium compound companies. We'll talk about the auto parts and also components, the supporting companies that actually help car manufacturers make their cars. Of course, we also touch on the electric vehicles manufacturers themselves as well, and also EV policies around the world. How the government is actually trying to induce our spending habits to actually convince us to buy our next vehicle in using electricity, right? So of course, here's a snapshot of all the companies that we will be touching base on for the chapter 1, lithium compound and battery segment. Chapter 2, you'll be talking about companies that previously we have talked about before as well, DNO, and also Osram, and also Fuya Group. And of course, the highlight would be the EV manufacturers. You have a handful of them over here. Of course, the few of them that we are actually going to laser zoom down would be companies like Tesla, NIO, and also maybe we talk about more on Volkswagen as well. All right. Okay. Enough of the advertisements, and let's zoom on to the topic of tonight, which is MPI. So as always, you have a disclaimer here. What we are going to share with you today, take it as a discussion rather than a buy, hold, or sell decision, right? If you think that the company is really nice, really prospective, please do further due diligence before actually making the decision on your own. And we wish you the very best if you actually found a reason to actually invest in whatever companies that we might have been discussing before, right? So Chun Bing, I'll let you take it away. How and what is MPI and how it actually links back to one of the Malaysian banks that is quite big in Malaysia.
Yep. So I think you'll be surprised because most of us, we will recognize Hong Leong as a bank, not really doing something else, but actually they are covering quite a bit of stuff. Not only doing the banking stuff, this is one of the things they get involved. So Kasem and Dynacraft is actually a company operating within Malaysian Pacific's industry. And then what they really do is doing all the manufacturing and distribution services in the semiconductor industry. And then, of course, Hong Leong didn't started it themselves. He actually acquired by them 30 years ago. And then there's been doing different things around semiconductors, particularly in assembly and testing. That's why we call them as OSAT, the outsourced semiconductor assembly and test. So it's not really on the upstream, but they are on the mid to downstream kind of player serving all the big boy. So this is some of the background of MPI. Basically, they are the semiconductor arm for Hong Leong groups. So if you go to the next slide, you'll be able to see what actually are them doing right now. Of course, like I say, they actually got acquired 30 years ago. So this is some of the milestones. So they have been quite actively doing into this. And then, of course, the recent year, there's been helping to do the assembling and also testing, but then more towards the high-end stuff for example, smartphone, and then electric vehicles, 5G, and so on. But of course, what they do is they are doing the testing, assembling services on behalf of the big brand. So they are not the one owning the technology or actually inventing it. So this is the one that doing all the services, or the outsource services for them. And of course, it's 100% Malaysians own companies. And then this is some of the milestone. So the next slide actually will give you the overview of what is the semiconductor industry is all about. I think probably you guys see this before if you guys have been following us. So it basically go from design down to the product being distributed to the end consumer. So design is all the big brands that you see like Broadcom, Qualcomm, and so on. And then when they design this thing up, typically they need the foundries wafer fabrication. So this is the big name like TSMC, Sutera, and so on. Of course, the big boy is actually TSMC. And then to support these things, they're actually supported by a lot of people. So for you to have this being fabricated in, you need precision cleaning. So this is where front-end come in. And then of course, when you have all these things done, the next thing you will need to do is actually doing the assembly. So we have the chips, and then you want to put everything together, test, package it out, and then go to the electronics, the EMS services providers. And then of course, supported by different things. You need to do the testing. You need the player from the ATE side, the automated testing equipment provider. You got Penta, Retrox, and so on. And then go down one step lower, then you need all the precision or all the small component that supports the testing and so on. And you got specific company that doing the test socket, which is the JFTech and FP groups. So after all this is done, then you pass to the people to do all the manufacturing services, Foxconn and so on. Before you put everything of this, go to an end products kind of a brand, be it Huawei, Apple, Xiaomi, and so on. Then they will actually deliver it to you as a consumer. But of course, there are some company do end-to-end, Samsung and so on. So because of they do end-to-end, they got advantage in terms of pricing and so on. But nevertheless, this is the semiconductor overview. The left-hand side is the upstream. They are the designer, and then they own the most margin. Then what we are going to discuss today is MPI sitting at the middles. So they're doing all the assembly works, and then they are the one to meet to downstream. I think we can go to the next slide. A deeper look into how all these things go together to the OSAT provider, which is CASM, right? So there's a few things. So they also some of the EMS services go into them, and then of course their IDM and so on. So basically they are in the middles, doing all the assembly and work. But I won't go into it in details because it can be quite technical. But all in all, they are the one doing all these services for these guys, right? And then we can go to the next one that you briefly tell you what is the thing that they are producing or supporting, and then what is the key application. So the application is the big brand that you mentioned. So for example, if you talk about consumers and communication, and Huawei and so on. But of course, what MPI did is everything on the left. So they have they did this system in package, and then this all the things that they are doing for all these guys. So they are not only into the smartphone, but they also in automotive industry and so on. So the right hand side is the 4 key industry they are supporting right now, using all the services they have right now, MEN and sensor and so on. So these are all the things that they do. And then we can go to the next one. It will actually tell you where are they at right now. The key one still in Malaysia. So you see the one that is in blue is actually their manufacturing plants. So like a lot of other company, be it Penta or whoever not, a lot of Malaysia company, when they are into this line, typically they have another factories or another manufacturing services actually put in the China side, right? So Why you need a China site? Because they are supporting a lot of business from the China regions. And of course, they have different sales office around the world, but the key ones still in Malaysia and also China. Like what we actually mentioned in the title, they are one of the guys that get benefited from the US and China trade wars. Okay. Then we can go to the next one. Yep, some of the production facilities. Both of it is actually in Ipoh. And then the difference is actually going through different products. So you can see SOIC, Micro, and Sodon is on the, they call it the M side, and then they call it the S side. So another part of it is actually in China, Suzhou. And then you'll be surprised when you see the drone things in there. Yeah, they are doing quite a number of the OSAT services to support these kind of products. So this is some of the three key sites, three key facilities MPI is owning right now, operating off Malaysia and China. So we can go to the next one, which will give you the overview. Surprisingly, they are quite equally spread out, which automotive has been the one that supporting their services. And then, of course, currently, they remain the focus into it, even though automotive got hit quite badly, and then they are eyeing into supporting beyond all these normal vehicles, but go into electric vehicles, be hybrids or whatnot. So this one actually built up 33% of it. And then the rest, the second and third is quite close. It's mainly to support all the big data and also industry 4.0 kind of parts. So and then on the other hand, they also support a lot of different devices that support all the 5G services that plan by different player or clients. And then also they have a very small market share, not market share, a very small revenue come from the PC and also notebook. But then definitely all these got some impact during the pandemic, but they are still doing quite well, and they have a lot of prospect into this company. And then you can see their share price actually went up quite a little bit since last year. So you can go to the next one. So this is some of the
So
breakdown.
I'll take it from here.
Yep. This is all the quarterly view from MPI.
Yeah. So if you look at the numbers, usually if you manage to capture the growth of the company on a preceding quarter versus current quarter kind of basis, it somehow gives you a kind of gauge that business is probably not going to be cyclical in the short term, but because of certain kind of catalysts that is actually trying to make the company grow steadily or even at a faster rate. So if you can notice, if you look at Q2 fiscal 21 of MPI's revenue is around at 484 million. It jumped up around 10% compared to the previous quarter. So on a quarter-on-quarter basis, there's already a significant kind of growth that the company is already reporting. Of course, if the operating efficiency, the operating cost, all of that gets nipped in the bud or managed well, the profit or the profit after tax can also increase further or more than the revenue. So you can see that the profit after tax of MPI has actually increased 20% because of some kind of operating efficiency, operating leverage that the plant currently has. And to actually grow 10% does not require MPI to actually spend additional resources in terms of the manpower, capex, or even the existing OPEX structure is well enough to support this kind of growth, right? Of course, on a year-to-year basis, you can see that the company is actually inching up 18% growth. And of course, we talk about how the company is being very well run. The operating expenses does not grow in tandem with the revenue it managed to offer. some kind of operating leverage to MPI, which is why you see that even though revenue just grew 18%, the profit after tax actually grew 52%, and of course, so does the earnings per share as well. So of course, this is a company that does still undergo some certain capex kind of investments. That's why you can see that in terms of the capex, it's quite stable. It is also showing a bit of trend that due to the increase or growth of revenue, the company is actually trying to also allocate more capital to actually undergo capital expenditure in line or in anticipation of a further growth coming ahead, right? So maybe all of these numbers might be a good sign or kind of sign that there's still some kind of growth in this company, and of course investors who have previously caught hold of these numbers and try to rationalize it has probably made the share price go up as it did compared to the early of the year, right? So all of the numbers paint a very good supporting picture to the company share price movement. And if you look at historically the financial achievements of the company, this company is a steadily growing company. You can argue that OSATs are quite competitive in Malaysia, but nevertheless, MPI is one of the so-called growing ones steadily, has been growing non-stop ever since 2012, even in the year 2020, where, pandemic actually caused a lot of companies to miss their growth forecast. That's not quite the case for MPI. They actually lock in more sales, especially riding on the tech catalyst or tech hot momentum back then, right? And of course, the only thing you might want to argue is that profit margin for an OSAT company might not be necessarily the most lucrative one. Of course, over the years, it has been increasing and improving the profit margin of the company's operations, but at most, at best, currently is going to be sitting at around 11%, 11.5%. The latest, more convincing one is the achievements or the results of the second quarter of 2021, which shows that there is still a little bit of potential of the company to further increasing the net profit margin, which is 13.2% already. So looks like MPI might be still recording a growth if things goes well for the upcoming 2 quarters. And of course, balance sheet is quite straightforward. You are looking at a company which has been growing the assets and also the so-called retained earnings of the company. In terms of debt, there is little debt that the company is currently having. So it's just around 23.72 as of the second quarter of 2021, right? So if you take the ratio of the total debt over the total assets, the remaining of it would be in retained earnings, right? So this is a company that is debt-free, I would say, cash-free, will not actually run into any kinds of liquidity issue, barring any, if the company continues to be well-governed and well-run. And it has always been that case. And the numbers has always been proving a point that the company has actually been growing and steadily well. And there maybe isn't anything in terms of the numbers to actually raise eyebrows of potential investors. Of course, usually if the P&L and the balance sheets are quite well, you would actually anticipate that the cash flow statements will also be showing a very good results as well. So the company has always been in free cash flow, never ever undergo any capital raising exercises, because the cash generated from the operations is sufficient enough to further invest in the company, or to also reward shareholders in the form of dividends as well. All right, so straightforward, the numbers from all the 3 key statements have been portraying very good growth and also good prospects of the company. And of course, with the current tech frenzy, which on and off still happens to go on a sudden bull run, you will see that even though share price of the tech industry might be volatile, but over a longer period of time, say for example 6 months, tech shares still continue to climb higher if you can ignore the so-called noises that is happening on a daily basis, right? So Chun Bing, good business, good numbers, good figures as well, but of course valuation-wise, there will be different people with different opinions. Some will say that PE is a little bit high since the share price has climbed quite a bit from the price early this year. But of course, as value investors or as growth investors, what we want to know is what will happen in the coming future. And based on that kind of positive catalyst, it gives us the so-called comfort that, it's still possible, a company that to invest in, even though price is currently at probably the historical high. But what is the so-called outlook or the prospects of this company?
So if you can see, originally they have a lot of business, I mean, be it locally or across US or Europe. But then the key one that actually happening is there's a very strong local demand coming from China itself. So they are definitely one of the few guys that benefited due to the not pandemic, due to the US-China trade war. Actually trigger more demand because China wanted to own the products or the services themselves. So that's why it's more thing coming in, more R&D and so on. And of course, their cash position, like what Jupan had mentioned, is very strong. People are suffering from cash flow problem during pandemic. They are not. They remain having the operation, although the sales maybe get hit a little bit here and there from different industries. So this is the thing that they'll continue to get it on. And then one thing to note is they are doing some capex as well. I mean, doing some capital expenditures, meaning they're doing some expansion, be it having some new buildings or new site in China and Malaysia to continue to support the different prospect they are seeing in the future. And then the last 2 points actually what I mentioned already. They have some strategic investment, which I will share in the next slide. Last but not least is they are the one continuing to be operational during pandemics, although most of the guys are forced to stop. So this is what they claim they want it to be at the end states. So they wanted to position themselves as a smart factory to support all the people at the upstream. So this is some of the things that come in, but of course it takes years to actually build it up. And then you can see since, on a quarter-to-quarter basis, they has been spending money into capex with a few things. Of course, the key one is to automate some of the processes and then able to get rid of, rely more on machines. And then when you rely more on machines, meaning your quality control can be somehow improved because the error rate due to human or whatnot can be reduced. And then the right-hand side is some example that they are doing that help to actually increase the capacity, so how much, and so on. So these are some of the things inside their plan that they have shown to us in their investor briefing. The next one is actually telling you another future plan as well, which is some of the things they wanted to enter, not really enters or something that they wanted to actually get involved and start to selling all these services. So, for example, there will be some focus into some front-end modules, but I won't go into this because this is the thing that will be very helpful for the 5G eras. They will need all these modules. But the second and third is something relatively new to them. They are trying to evaluate whether 3D printings can come into place due to what they already have, as in their capacity, their manufacturing services. They also wanted to venture into this place. And then ultimately is they wanted to go slightly upstream. So how to do it? They try to go an easy way out. They are looking to acquire a design house, but of course this is just plan, nothing concrete yet, but this is what they are trying to tell you. Now we have some good growth catalysts due to US and China trade war. They want to ride on it. they want to go upstream. So these are some of the things that they have put in. They plan to do it in the future. What has been done is all the capex that they have put in for the facility and so on. So this is the few things that you can expect if you come in the next few years for MPI.
Okay, so looks like everything is blue sky, but what are the risks that investors or even the current, investors who haven't invested or investors who have invested in this company, what should they take note of?
So I think what they really have is doing the services that the top guy don't want to do. They outsource. Then you become the middle guy because you know how to deal with probably more having some pricing advantage when talk about labor costs and whatnot. But there are a lot of people doing something like this. And of course, you have the name of Unisem, Inari, and so on. And Inari technically can link to Apple and so on, which there are some big brand with certain volume or expectation that will come in the futures. But what's in for MPI is all the client they are serving right now, but it doesn't give you the certainties. So this is the part that OSAT player that always have this kind of worry, competitive, and the margin going to be low. So you can't enjoy the margin like 20 to 30% that come from people that's focusing on doing test socket like JF Techs. You also cannot have good margin for people that do OBM, original brand manufacturers like D&O and so on. So this is the thing that they can't really compete. And of course, we have been talking about the other people who benefited from US-China trade war, who know what will happen in the futures. And then if everything go back to the norm, then maybe they can't really get more and more sales from the China side anymore. So this is all the risks that come in for MPI. Key one is they don't really have some very stand out. Modes, or don't really have something stand out in terms of key client, key industry, unfair advantage in certain technology. This is something they don't have. That's why when I see they have the plan to acquire a design house, I think it's a good move to slowly go upstream. But then I don't think it will come very easily. You acquire whether this something that will give you the advantage for a few years. For how many years, you don't know. Maybe they come in 1-2 years, then something else come out. But because you're not the one doing it or building it, you just acquire and try to adopt the technology, you might not be able to maximize the return of investment. So some of the risks that MPI are seeing it. But of course, for me, beyond all this, a lot of expectation have been putting in, driving the PE going up quite crazily, over the past few months. So this is something to take note as well.
Right. So we talk about how this company has been growing in terms of share price quite significantly. But of course, it has a reason. It ties back to the fundamentals and also the so-called prospects a company might be embracing or encountering in the near to midterm. So of course, talking about the valuation of the company, as of today's closing price, this company is trading at around 43 times PE, ROE respectable 11.7%, trailing 12 months profit margin. Of course, being an OSAT, you don't expect a higher range of profit margin, but decent, right, at 11.3%. And of course, this is a company that actually pays out growing dividends, never really required any form of capital funding from the public. So what they earn, they manage to spend it well, grow the company well, and they also pay out a portion of it as a dividends to shareholders. But of course, due to the ever-increasing share price, the dividend yield will always paint a very low yield because you are taking a trailing dividend against today's buying price or today's closing price, right? Of course, I think it's really up to the investors to gauge for themselves. Is the upcoming prospects going to be very, very favorable to MPI's growth, And if it is, then of course a PE ratio of 43 times might be actually a fair valuation to get some kind of exposure. But of course, there are also other better tech companies or semiconductor companies that are doing more value generated kind of products and services that maybe also give potential investors a better peace of mind. So there are other companies like we've talked about Vitrox, we talk about UWC, we also talk about other kinds of tech companies which are not in the OSAT stream, which have a certain kind of technological know-how, IPs or whatsoever kind of strengths to actually put them differently compared to their peers. And due to that, they actually command a higher premium, also a higher profit margin, and a more diversified revenue portfolio stream that actually lowers down the risk or the volatility, or maybe the so-called mental strength when we actually buy or invest into tech shares. As we all know, tech shares can be really volatile. If your heart cannot take the wow ride, then maybe try to try to make some reasoning by investing into a more solid, a more stronger kind of tech company. But if you're someone who can take the wow ride, maybe MPI and the so-called proxy or catalyst to the China semiconductor market might be a choice to you. Right. So I'll leave it to you guys to make your own decision and do your further study. And of course, before we move on to the questions, here you can see that the share price of the company has actually risen quite a bit ever since we hit or past 2021. I still remember my mom told me that she has MPI below 20 ringgit a share, and look where it is today, right now, which is at 40 ringgit a share. So incredible, right? And incredible growth for the company. And of course, to those who have actually invested long term to this company, yeah, congratulations. It has been a very happy kind of returns by trusting or putting your money with a well-run company. Right? But of course, what would happen in the future? It's up to your further studies and also your further judgment. So that's all for MPI. We hope you like the sharing. It's a simple kind of company since we have previously talked about OSAT companies as well. But it also has its strength and also catalyst, which is why the share price have climbed so much for the past 1 year. So we will be heading on to the questions segments and see what kind of questions that awaits us. Okay. So
I think there isn't any.
Good afternoon, guys. So
yep. There isn't much question, but it's a comment about Kasem in Ipoh. Yeah, they are quite big because they have two facility in there. I think, yeah, you're right. It's more than 5,000. It's about 2,000 at one side and then 3,000 plus at another side. Pretty big, and then has been there for quite long lah. They are not like the recent 5-year kind of company for very, very long, but has been riding on the semiconductor industry, showing quite a good numbers.
Yep. So yeah, I think we have one question. So go for me, Technovision. If you want to have exposure in OSAT sector, can comment. I think we covered me, Technovision before. It was one of the Not So Late Night Show episodes. But one of the reasons that you need to take note of me, Technovision, is that they do produce a number of machines, but only one specific model, I forgot which one, is the one that
should be me as well, if I'm not mistaken.
The me.
Yeah. They have me, we, Udon. Yeah, should be the me model.
So it originally was a whole package. So if you want to do something, you want to open up or improve your OSAT line, why not just buy the whole line from me? I have the entire end-to-end services, right? So, but we just noticed that only one of the particular segment or particular machine sells pretty well compared to the rest. So you might need to relook into that, whether have Me Technovision improve their so-called other machines that do other functions, so that it would be more convincing or more bigger catalyst for me to grow if it managed to push out its machine as a total system rather than just individual machineries only. So if there's a breakthrough, then yes, Me Technovision might be experiencing or will anticipate a higher growth or higher prospect in the coming future lah.
And then, I mean, one thing to clarify, if you guys are not familiar with me, so basically they build machine for the OSAT player. So the OSAT player need to buy from this so that they can do all sorts of testings or assembly and whatnot. So this is the machine that Jupan talked about. That's why if you look into their financial performance, their margin is pretty well. I mean, Me Technovision is pretty well because they are one sharing the machine, but the volume is, I would say, following the company capex cycle. It has been quite, I would say, quite consistent, because when one company, big company come down, another one pick up. So far, the recent few years still able to go down the one pick up. So you can see slightly like this. But if somehow another big guy didn't come in and the first one that they get from them, the capex cycle haven't kicked in, then you will see a very big drop for Me Technovision. So this is a big risk if you want to look into Me Technovision. Is MBI considered
Good
as a
question. Right. This is a good question. I would say that there is some kind of they pass quite a few numbers of our dividend gems criteria and checklist, right? Pretty much solid and predictable kind of dividends that tag along with the company's performances. But I think you also need to take a step back and quantify MPI's business deeper. So as we all know, even though semiconductor stocks can be very, very lucrative, can go up very fast, or when the boom actually comes, it will be roses everywhere. Everything will be very rosy. But do note that semiconductor is not always rosy. They were around, if you look back at the semiconductor cycle, in the 10-year horizon or even 15-year horizon, bound to be 1 to 2 years during this timeline, tech shares or more concrete would be the semiconductor shares would actually go into a certain kind of cyclical downturn. Because if you guys dig deeper into so-called the technological advancements in terms of chip designing, they will always need to challenge Moore's law. So Moore's law always state that there's a certain time period that mankind needs to actually do some breakthrough to squeeze in more systems on a chip. So during that kind of tough period, semiconductor companies will actually undergo a certain downturn cyclical. So if this kind of cyclical persists, or if it continues to maybe increase along the so-called as we slowly push for smaller and smaller chip size, then you might anticipate that semiconductor stocks like MPI, even though have been quite generous and quite predictable to paying out dividends, might get impacted during the semiconductor cyclical downturn. So just to take that in mind, good dividend stocks can also misperform, underperform for a certain period, but at the longer time frame, it must recover back. So you have to dig deeper in terms of the semiconductor cycle and try to see for yourself whether is it going to be always that I would say, can it be so predictable, right? So this is one point you need to take note of. But other than that, the payout pattern, the so-called growth together with the business is quite consistent. Okay, I think there are not much more questions. So I think we'll just wrap it up by just highlighting again what we will be covering this Saturday. We're going to be talking about electric vehicles. Of course, electric vehicles is nothing new. Some of you guys have maybe already making a fortune out of investing in Teslas and other EV makers for the past few years already. But now we wanted to show you guys, after going through all the analysis and all the hard work and the numbers and also the latest sales figures, is it still the right time to invest into the EVs, and which one is more prospective, which one is safer, which one is more convincing to actually make a bet on, right? So of course, all EVs currently are still loss making, but some of them are actually exhibiting quite good numbers. But of course, nothing is clear blue skies. There's always risks and threats lurking around, and which is why we wanted to take a deeper look into all of the EVs and the so-called potential supporting companies. Like, if EVs is so highly competitive, why not just consider a company that is in the auto parts or the components? And we talk about EV policy. So which are the countries that are more welcoming, and which of these car manufacturers are actually operating in the very friendly EV policy country that can actually help them to increase their market share and their sales in the coming years. So all of this we try to tie together, and at the end of the day, give our own opinion, and hopefully also giving you guys a brief introduction of what EV is about. It is definitely going to be one of the upcoming multi-baggers, but of course we want to pick the more safer and the more tangible options when it comes to putting our hard-earned money into an exciting but also risky kind of investment. All right, so we have a few questions coming up. So, Chubing, please share Dynacraft business. Are you aware of this?
It play a very small portion of it into MPI. I need to double check, but of course, the key services is always coming from the CASM, where they have all the facilities built after them in Ipoh and also in Suzhou.
Yeah, so I have here just a little bit of information on Dynacraft. So basically, Dynacraft is also in the packing business, so they do some kind of components or some kind of semiconductor finishing and packing kind of business and services. So custom contribution wise is still going to be bigger than Dynacraft as well.
I think next question is about the growth rate for MBI for 2021. To be honest, if you check out their performance, they has been hitting quite a very good number in the past few quarters. Of course, it due to the spike of the demands in the China side and so on. Whether it will hit that kind of growth rate again or not, I don't think so. I mean, my personal opinion, but then we shall see what it will come. So because it has been showing the momentum for the past few quarters, to continue with the rate that they able to hit in the last few quarters, probably is slightly harder.
Yeah, I think this one is pretty much 50-50. Of course, Chumbing is thinking is harder. I think that it is possible because, as you guys know, if the US and China trade war were to continue, there will be more reliance on China semiconductor or China tech companies into sourcing all these kind of components to come up with their own progress in terms of semiconductor. As you all know, we talk about 5G, we talk about digitalization, all of these big words on how digitalization will change our lives. All of this will not be possible if there is no semiconductor playing the backbone. And if US continues to become or paints China as one of the so-called bad guys of the world, and preventing them from getting access into technology, which is under US custodian, then China would have no choice but to source for other alternatives. And there are a few companies in Malaysia that has seen their share price rise due to the catalyst of being China proxy or China semiconductor proxy growth. So here you have a 50-50 opinion. Do your own due diligence and find out which one of us or which point of view is more legit, right? So we leave it to you to make your own decision, but it is possible. It's a 50-50 kind of a scenario for the growth rate of MPI.
But something to add lah, if the next quarter result come out, if you compare year on year, highly likely they will have a very good number, because their last Q3 is the time they have a very bad hit. Some hit due to pandemic. If you're talking about looking at the quarter itself, year on year, then probably yes. But if you're talking about,
I fully agree.
If you're talking about if you average out or whatnot, then it depends lah. So we have the last question.
Okay. How to DCA for MPI since most of the time it's riding and low percent dropping? Okay. This is also a very good question. Sometimes you don't need to do DCA when the price is down. You can do DCA even though the price is up as well, because you are very confident that the company will continue to grow, and doing DCA instead of averaging down, you are averaging up. And there's a terminology for it, which is adding on to your winners, because you're so confident of this company, even though yes, it has risen up 20-30% from your original purchase price, but you think that I'm still very confident of this company. I think that it can still grow another 20-30%, right? Of course, waiting for the company to drop for another 20-30% to your original price is a bit impossible, judging the fact that it is in a very hot segment, and it is exhibiting growth without actually coming to a halt. So this is the situation where you need to consider to average up, take a bigger portion of your portfolio, but increase the average price upwards because you are confident of the company. So there are some companies that I am willing to average up. And in fact, I think it is easier for me to average up on a company rather than average down. Average down means that you have probably made a mistake or buying it on a high side, and currently it's at a loss and you have to average down. So the mentality there is that maybe I'm really, really wrong. I'm 50% wrong, but I'm not sure whether I'm 50%. I'm really, really wrong or not. But I have the money to spare, so I average down and see what happens. But if I were to average up, it's going to be a totally different story. My thesis or my view on the company is right. That's why the company share price go up. But I still think it can go up higher. Then the ease or the so-called mental strength to actually average up is easier compared to averaging down. Averaging down, you need to relook into your thesis whether, even though I average down, is it still a good price to buy the company and to average down or to have more exposure? Because if you continue to make a wrong analysis, the share price go down more, then you are actually holding to more losses already. If you average up, if your thesis doesn't work out that well, at least there's still some kind of some portion of capital gains there, just that you narrow down the capital gains. One is winning, add on to your winnings. One is potential, adding on to your losses. So if it's a good company, do not feel afraid to average up. And it's also a form of dollar cost averaging. Right? Okay. I think this is one of the most important message. Do not feel afraid to average up in a good company. So yeah, hopefully you do deeper, more homework, and find out whether MPI is worth the kind of company that is worth to average up or not lah, to have a huge or bigger exposure to it. So I think that's about it for today. So for those who are interested to joining us in our Saturday event, do feel free to check out the links posted. Of course, subscribing to Premium Club means that you're not going to attend the EV sharing session, but you're also going to attend the upcoming thematic transcripts, which will cover cloud, semiconductor, and also e-commerce. Of course, these are just the events lined up for this year. Next year, we will also rotate around other exciting kind of segments and sectors to bring you guys more content on investing as well. But that's about it for tonight. We hope that this sharing is a good one. And as always, thank you very much for spending 1 hour of your Thursday evening with us. Of course, the weekend is just around the corner. And if there's nothing, we bid you a good evening. Stay tuned for the next episode of Not So Late Show 2 weeks from now. Next week, we'll have a private session. And let us know in the comments whether what company you want us to cover. And if that's all, we bid you a good evening and see you in 2 weeks' time. Bye-bye.